Joining us right now is Jeremy Siegel, Professor Emeritus at Finance at the University of Pennsylvania, Wharton School of Business. Good morning to you. Before we even get there, I'm just curious what you think of this earnings season that we've seen so far. We had this Goldman Sachs news this morning, Bank of America, obviously J.P. Morgan last week. We got Netflix later today and Tesla tomorrow. But what's your sense of the numbers you're seeing vis-a-vis or versus what you were expecting?
Well, they're pretty good, to say the least. But we have to remember, first quarter is virtually all pre-SVB, which occurred around the middle of March. So, we're not getting in these earnings what effect the slowdown in lending really might impact the earnings. And in fact, that's even true with the data. I mean, we're getting March housing starts. Most of those starts were certainly committed before the banking crisis, so they were allowed to start. Diane mentioned something very interesting. I mean, what we might see from the banking crisis is the small guys being hurt, and that's not just in housing, but in retailing and all the rest. And the big guys who have, lines of credit and capital and don't go to the small banks, they might actually profit more. So perversely, the banking crisis in some way might actually boost earnings to a number of firms. I mean, particularly the large banks that we've seen, and even throughout the entire economy going forward.
So you think it's actually much worse than we know?
Well, I think the effect of the banking crisis, I mean, what I hear on the ground is that the lending to the small guy from regional banks has slowed dramatically. And the impact is there. It's just not in the data yet. And as a result, it's my feeling, I share Austin Goolsbee, it's time to pause. I don't think they will unless we see deteriorated data between now and May 3rd.
What do you see that Jay Powell doesn't see? I would imagine Jay Powell sees the same data you're seeing.
Well, Jay Powell, I think there's a couple things that he's seeing. First of all, I think he really underestimates the slowdown in housing. We've talked about the distortion in the data, in the housing data. When data in housing prices is still going down. Next week, we'll get Case-Shiller, which might show the 8th consecutive decline in housing prices, even though the BLS continues to show higher prices. So in fact, I've done a calculation using current prices and core year over year using current housing prices, both on rentals and on owner-occupied homes, is down to 2% year over year. But it's over 5% in the official statistics. So I think inflation basically is back down to the Fed target.